The last time we really saw a market have a pullback like we're seeing today was in 2008 when we went into a bear market for roughly 546 days. I mean, we did go into a bear market at the onset of COVID, but it was so short lived, I'm not including it. Either way, going through a bear market can create a lot of emotion inside of investors that can make them take emotional decisions that may not have been in their best interest. On the bright side, there are many approaches that you can take to weather this bear market and come out better than you initially were. In this episode, I'm going to cover 5 tips that you can take to ensure that you make it through the bear market and are able to take the emotional decisions out of it and put you on a path to a nice return as the market recovers. Here we go.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
How's it going? Hopefully everyone is having a great weekend. I am so excited to be bringing this episode to you. I just keep trying to come out with these current event episodes for the simple fact that they're relevant. There's so much going on financially right at this very moment that I couldn't help but take another minute to show you and give you some tips to get through this market. So I've heard a lot of hearsay going on, and I just wanted to address it. But all in all, thanks for joining me today on the Financial Mirror as we continue to improve the one thing that we can control, ourselves. If this is the first time that you have joined in, first off, congratulations. Thank you for finding the personal finance stream that you always needed. But all in all, don't forget to hit the subscribe on YouTube, hit the like on Facebook, share these videos to all of your friends, all your coworkers, all your family members. If you are listening on the podcast, thank you. If you're on Apple or Spotify, 5-star reviews and written comments go a long ways in helping spread the word. And if you're on any other podcast, sharing is your best friend. Sharing is caring for everyone else's personal finances, because all in all, we want everyone to be successful with their finances. So today's a good one. So if this is the first episode you found, great. This is a applicable episode to almost every single listener because, I mean, let's be honest, we all are experiencing this bear market. So as you heard in the intro, we really haven't had a big bear market since 2008, and that one lasted upwards of over 500 days. So no telling how long this one's going to last, but all in all, this type of information is good because these 5 tips will help you survive the bear market. I'm telling you they will, so just bear with it. But so many people are talking about the market, and I figured it's a good time to just share a couple tips that you can utilize to make sure that you are not making irrational decisions while the market is making this slight correction, right? I've talked about it in previous episodes, but we've had a lot of bullish action. Bullish just meaning that it's been going upwards. Lots of big bullish action. I mean, since pretty much that little short-lived bear market we saw at the onset of COVID, this market has been in an upward trajectory and people have just made a lot of money off of it. So the big news is that this pullback or this correction, whatever you want to call it, it was kind of needed in a way. The market was just, I mean, it was just bullish as all get out. And now a bearish market, if you didn't know what a bearish market is, it's just simply that the market is going down, right? So you can see all the red on the thumbnail. If you're watching this if you're listening to this on a podcast, tons of downward movement with the market, and that's what we're going with. But before we get started, I have a super funny story to tell you because we're talking about the bear market. So me and my fiance got into backpacking. So if you didn't know, or if this is where you just found me, we moved from Hawaii to Idaho, and we got out to Idaho and we got into backpacking. So we finished our first backpacking trip, and I must say that it was absolutely beautiful. Nature is just beautiful. There's so much out there, and it's amazing that, a lot of us don't even get to go out and see it. So we took the time, we went out to this beautiful lake. If you're watching this on the stream, you can see it. If you are not watching, that's fine. Just Google Alice Lake, Idaho. So we went out to Alice Lake. We did this hike out to Alice Lake. What an amazing view. We camped out there overnight, slept by the lake, took a dip in the lake, 30 degrees, super cold, but so much fun. But all in all, you can see that it was beautiful, right? Well, it was beautiful, and then nighttime came. This is my first backpacking trip, right? So we're out in bear country. So we're thinking about this bear market, and speaking of bears attacking the market, our first night in the tent out in backpacking country, I hear this rustling, right? So I mean, I'm thinking this bear is right outside our tent. I think that it's time to show that I can defend against a bear, right? I can do it. So our first night out there in bear country, I hear this rustling, my heart's pounding. I grabbed the bear spray and I went to investigate. Lucky for you, I saw nothing, right? I saw nothing. All I did was scare my fiance, and I was out there frantically pacing around trying to find this bear that was outside our tent that I heard rustling. Well, lo and behold, I was talking to our friends that were out there camping with us as well, and we're pretty sure that it was just chipmunks, right? It's just chipmunks. It wasn't a bear. But at the time, I was like, man, like there's this massive bear out there. I don't want to be inside of a tent because I don't want to spray bear spray at the bear. It get in my eye. Now we're really both messed up, right? Like I can't see, the bear can't see. We're just going at it blind, So it's like people investing in things that they don't really understand. It's like just going at it blind. So it's nothing you want to do. It's not a good position to be in. So anyways, in my defense, that is my defense is I didn't want to be inside the tent. I wanted to get out. I wanted to be able to use this bear spray if I had to, but that was what happened. So I didn't get attacked by a bear. We didn't even see a bear, but I sure thought I encountered one. Or my second bear, right? Because I'm already experiencing the first bear in the market. Okay, bad joke. So the bears that are attacking the market are real. So the one that I saw or the one I thought I heard is not real, but the bears that are attacking the market are real, and they have caused a pretty major pullback. And you can see, looking at the S&P 500, if you pull up that chart, you can see this huge bullish trajectory, and now starting to pull back. If you just started investing, this could be your first bear market. And what I like to say is that until you've experienced one bear market, you don't really know what to expect. You can't comprehend everything that's going on. After this first bear market, I will tell you, it gets easier. Emotionally, it gets easier. Still is not fun to look at your account and watch it just dwindling, but it does get easier because you'll see in the tips. We're going to go over these tips, and you'll start to see some of the things you can do to make it easier now, and you'll be able to reapply these tips later. If you've been investing for a while, you may have been through bear markets before, but you may have forgot what it felt like. Well, now I'm going to tell you that no matter where you're at in your experience with bear markets, I'm going to give you 5 tips, very helpful tips that will help you through this bear market and any future bear market if any of these tips stay applicable to you. But at the end of this episode, I want you to have a couple of tips in your bag that'll help you navigate the market, and you'll come out winning on the other side. I guarantee it. So let's jump in. So the first thing is I want to talk to people that are nearing retirement. So tip number 1 is talk to someone if you're close to retirement. That's the number one thing you can do in any bear market. And that's the first tip I wanted to cover, because if you are getting close to retirement age, and when I mean close, I mean within the next 5 to 7 years, that's a lot of time that you may not be able to build your account back up. So you need to talk to someone. So my first tip that I want to give out is that if you're in that ballpark of that 5 to 7 year retirement range, please talk to someone. Don't sit on your hands and wait. Waiting is not going to make it better. Get involved, talk to someone, because there are steps you can take to lock in some of your income to protect income and principal as the market is pulling back. So if you don't end up you know, I don't want you to end up panicking. Pretty much, I don't want you to end up panicking because you don't really have time on your hands to allow the market to correct and start to pull back the other direction. So jump in now, talk to someone, and get your retirement squared away, because it's the number one thing you can do for your retirement. So I want to start off with that category because you are the ones that may have some small actions to take, and it's not all emotional. There are actually things that you may need to do with your accounts to ensure that you can lock in some of your retirement gains that you have, because it's crucial, right? You're sort of in crunch time, and it is time to really go after it. So contact a financial expert to help you make decisions that are the right ones for you in your situation. So time's not on your side for this to recover. So talk to someone. And I want to say that first. You're my first category, and you're the first ones that get a tip. So the second tip, the market always goes back up. And that's a great thing to hear. You can look at this. This is 1900 to present. You can see how the Dow Jones Industrial Average has just went up. Are there little pullbacks? Sure, all along. The market's constantly correcting itself. But in the end, the market has always gone back up. So this tip should give you a pretty good sense of comfort, right? If you are looking at your account and thinking, oh my goodness, my account has gone down 20% in the past few months, well, guess what? You're not alone. Everyone's experienced the same thing. We're all in the same market. Many people are doing just that. They're panicking, and they're looking at their account daily, and they're like, oh my goodness, this can't go down anymore. I've lost all my gains. No, you really haven't. But just remember, tip number 2, the market always comes back up. So this pullback, it could go on for another 2 months. It could go on for another 2 years, right? Look back at the one I talked about earlier in 2008. That was for over 500 days. There's 365 in a year. Can you imagine being in a bear market for over a year? Well, it's possible. In 2008, we did it. So just remember, the important thing is you can only control what you can control, and the market as a whole, you don't really have complete control over. So keep in mind that you've got to keep your emotions in check. You've got to understand that the market's going to always come back up. No matter what you think, the market is going to come back up. So you just got to hang in there. Remember, you only get hurt on the roller coaster if you jump off during the ride. You just want to ride the ride. You're going to go down. You're going to pop back up. You're going to go down. You're going to pop back up. You get hurt when you jump off. You don't jump off mid roller coaster. You just don't do it. So look at the history. I've got it on the screen. If you're listening on a podcast, you can go pull up this stream, or you can go look up the market for yourself. These I'm not cherry picking charts. The charts are going to show you that over time, the markets have always gone up, and you are a part of it. So history's not going to just, I mean, it could, but we're talking all this history and tied up into one big chart. It is showing a pure upward trajectory. So don't panic. The market has multiple pullbacks over previous decades, but the great news is it's always going up. So tip number 2 is the markets have always gone up, and you've got to keep that in mind. So tip number 3, we've got to change your mindset to everything's on sale. Everything's on sale. When you walk into your favorite store and you see signs everywhere, you walk in, I just want you to close your eyes. Not if you're driving. If you're driving, listen to us on a podcast, don't close your eyes. But if you can just imagine that right now you walk into your favorite store and everything's on sale. Everything's 20% off. Well, guess what? Didn't we just say your account had dropped about 20% over the past few months? Well, don't you think it's the same thing? You're getting everything on sale. Mindset has to shift. Everything's on sale. The price will go back to normal. Tip number 2, the market will go back up. So you know that. So you know the price is going to go back up. So it's the same thing as getting that pair of jeans on sale. It's the same thing as getting that shirt on sale, your favorite electronic on sale, whatever, your newest phone on sale. It's the same thing. You want it on sale for the simple fact that you know the price is going to go back up, and you want to get it while it's cheap. That's the mindset we have to be investing with right now. That's the mindset that you have to remember. With this pullback, You can think of it as a loss if you choose, but that would be silly because tip number 2 said the markets always go back up. So just let your mindset shift. Let that whole mindset go to every single piece is on sale. Every dollar I put in there, I'm getting more of my money is going more into that fund. I'm getting more quantities of that fund. I'm getting more shares of that stock. I'm getting whatever the case may be. Everything is on sale. Everything I get is going to be cheaper. And when it grows, it's going to grow that much more. So remember that. Everything's on sale, and that's the mindset you have to have. If you think about it like that, you will quickly realize that you will happen to not really just be ecstatic the market's dropping, right? That's not like ecstatic, but you'll start to appreciate the red a little bit more. You'll start to appreciate the bear market a little bit more for the simple fact that you know when this thing recovers, man, you're going to see some growth. And that's the part that you have to remember and stay confident in for the simple fact that it's going to happen. Tip number 2, the market always goes back up. So shift your mindset. Number 3, change your mindset to everything's on sale. If you'll keep that mindset, you will prosper. I'm telling you. So number 4, tip number 4 is we're burning through these. And if you'll just jot a couple of these down, I'm telling you, you will be on your way to being prosperous in this bear market. But tip number 4, if you panic sold already, meaning you closed your positions already, start easing back in. If you sold all of your position in XYZ fund or stock or whatever, start easing back in. I want to address this because it's surely applicable to some. Some people panic sold. They all of a sudden started to see this market roll over. They started to hear about recessions. They started to see prices just increasing. They started to see these major stocks like AMD was killing it. Nvidia was killing it. Tesla was killing it. All these stocks were killing it, and now they're not. People started to see these roll over and start to drop and break huge support levels, and they start to panic. What do? They make emotional decisions and they start to sell. So if that was you, that's okay. That's okay. Next time you'll know that everything's now on sale and I should keep investing, and all of a sudden one day this thing's going to recover and I'm just going to be that much richer. So if you've already panic sold, that's okay, but start easing back in. Start working your money back in there. For you, I'm going to tell you, start easing back in. Don't take all of your money. So if you had $20,000, don't just throw it all right back in. Start easing back in. I'm using the word easing because I want you to think dollar cost averaging as I'm getting back in. If you took 20,000 out when you closed your positions, maybe split that 20,000 over the next 10 months. Maybe put 2,000 back into the market every single month and just ease your way back in. You don't have to go all in, all right at once. Take it easy, roll your money back in there nice and smooth and split that up. If you want to stay invested because you think that all of a sudden he told me, let me backtrack. If you think that you getting out is great, I challenge you. I challenge you a lot because all in all, the markets return 7 to 10% on average a year. So by pulling money out and putting it into a checking account, you're getting almost 0% return on your money. Putting it into a savings account right now, if you watched a previous episode of mine, average saving rates are like 1.1, 1.2%. If you're looking for that type of return, the market averages 7 to 10% a year on average. Am I saying every year is going to return that? No. But because of that 7 to 10% return on average a year, your money's doubling every 7 years. So if you'll keep that in mind, you'll realize very quickly you need to stay invested. You need to stay invested. You don't need to pull money out and put money back in. You need to stay invested. And that's a key tip right here. Like I said, if you panic sold, that's okay, but start easing back in because you need to stay invested. Money sitting in these checking and savings accounts are not going to keep up with inflation. Inflation's at like 8% right now. Money sitting in a savings account getting 1.2%, it's really not doing you that much good. You're not even hedging against inflation in that savings account. On average, the markets return 7 to 10%. So start easing back in, start putting your money back in there, and all of a sudden you will see that money start to grow again. So tip number 4, if you panic sold, start easing back in. Number 5, maintain basic investing principles. So during this bear market, it can be easy to stop investing because you throw this money in there and you're like, oh, well, tomorrow it's just going to drop. My money's just going to lose value because tomorrow it's going to go down. Well, that might be true. I'm not going to say that that's a terrible way to think. You're not lying to yourself. There's a good chance that might happen. The market is very wishy-washy. We're in a bear market, and most likely your money is going to lose value. The part is, though, is that when we stick to basic investing principles, all of a sudden we're dollar cost averaging. We're putting money in. We're getting it at the really good sale prices. We're getting it at the decent sale prices. We're getting it at the not so great sale prices. But over time, we're getting these average costs, and the money that, and when the money, the dollar amount moves, we're earning more cash. So it all comes down to staying invested, as we discussed previously, but sticking to the basics, which is just consistently putting money into the market. If you can do this in a multitude of ways. I've done multiple episodes on ways you can do this. The number one way that I do is I like to keep it simple. Put money into a S&P 500 index fund, whatever broker you go with, and just continue to buy into that index fund. That's the simplest approach to investing. Continue to put money into that single S&P 500 index fund, low cost index fund, and watch it grow. That's the easiest way to invest. There's other ways that you can invest, such as doing like a small, mid, large cap, splitting those up 25% each and then getting an international fund. That's how Dave Ramsey likes to teach. And when you utilize some of his principles, that's what you'll see. 25% in small cap, 25 in mid cap, 25 in large cap, and 25% in international. That kind of hedges you. That kind of diversifies you because the stock selection you're getting in the large, mid, and small are different companies. And then that also gives you some international companies as well. So if the US market tanks, all of a sudden the international market may still be doing good. And lo and behold, you're sort of hedged against some of that's going on. So that's one way to do it. If you want to stick simple, S&P 500 index fund, and just keep dollar cost averaging, continue to put money into that account. And that is the key. The key is to not invest into single stocks, but instead just stick to a simplistic approach of investing in that S&P 500 index fund. Don't go betting on companies if you're not willing to really research and understand these companies. Just go into the index fund and you're practically investing in all of them. So keep investing, dollar cost averaging. That is your best friend. Don't start trying to get all crazy like pick an amount. Here's the thing. If you'll pick an amount that you can consistently contribute every single month, that is your key to keeping it simple. That is your key to executing tip number 5. Maintain basic investing principles. Pick an amount. If it's $50, if it's $100, if it's $1,000, pick an amount that you can consistently invest and start investing it. And that is the key. Just keep doing it over and over and over, and you will see that money grow to amounts that you never thought was possible. So do that and come back and comment on this episode and tell me how much happier you are now that you kept investing. Now, that's my 5 tips. Like, that's it. Like, that's all you have to do. So number 1, talk to someone if you're getting close to retirement. Number 2, remember that the market always goes back up. Number 3, change your mindset to everything's on sale. Number 4, if you panic sold already, start easing back in. And number 5, maintain basic investing principles. So if you'll do that, you'll be on your way to riding this bear market out and rolling into the recovery and watching that money grow. I hope that this has truly given you this like overwhelming amount of confidence, because that's what I really was going after. I wanted you to be confident in this bear market. I wanted you to look at the great value that you can currently buy a lot of these stocks at. I want you to see how investing in these funds is going to reward you exponentially if you just continue to invest right now. Everything's on sale. I promise you. If this is your first bear market, the feelings and emotions you feel right now are teaching you something. Every single time you go through another bear market through your years to come of investing, you'll start to realize that it's not as bad as you thought it was this time, because you're going to see what it's like on the other side. You're going to see this recover, and you're going to see how much money you're going to make by sticking to these 5 tips. Riding this wave out, riding this bear market into the next bull market, and watch how much money you make. And that's really just is so confidence boosting, because right now everything's on sale and most people are not investing. If I'm just being honest, right now most people are not investing. They have stopped. They don't want to put money into something that's just going to lose value tomorrow. They don't want to continue to put money into something that's going to go down in price. I'm here to tell you that if you're not investing in single stocks and you're investing in these index funds and you're investing in these mutual funds, what I'm here to tell you is that investing in those funds will pay huge rewards when this market recovers. For everyone that continues to invest, you will be profitable when this market recovers. And that's just the way it is. It's just history. History. I showed you on the chart. It's just history. The markets always go back up. It just takes time to do it. This might last 2 years. It might last 2 months. We don't really know. Just hang in there, keep investing, and know that when this recovers, you'll be on your way to a nice payday. So if you stick to these tips, I'm telling you that you'll be on your way. Now, if you are not very comfortable with investing, or you just need someone to help you get started, I'm here to tell you that me as your financial coach can help you do just that. So what I want you to do is head on over to thefinancialmirror.org and hit book now in the middle of my website. If you will do that, you will see a calendar pop up. You'll get on my calendar and we will have a free consultation together. I will help you get set up on your platform of choice to start investing. We will see how we can get you to where you want to be financially. Any questions you have, we'll work through those together. I'm literally your personal financial coach. We'll walk through whatever your goals are, whatever your journey is together. Now, if you do want to give some extra dose of support to the stream, head on over to thefinancialmirror.org/shop and pick you up some awesome Financial Mirror gear. All of this gear is super low cost and just puts money back into the stream. So remember, every little dose of support is going to go right back into the content and the community that we're building here at the Financial Mirror. I appreciate everyone tuning in today. And I mean everyone tuning in. If you really are enjoying the Financial Mirror, please don't forget to like, comment, subscribe, and share on whatever platform that you are watching this. If you are listening on a podcast, if that's Apple or Spotify, 5-star reviews and written comments go a long ways in helping grow the community. Every other podcast platform, share it. Share it with your coworkers, your friends, your family members, and help people find out all the information that they need on personal finances here at The Financial Mirror. Could not be happier to continue to bring you relevant information every single week here on the stream. And I look forward to next week when I do just that once more. So till next week, continue improving the one thing that you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.